Welcome back to the channel and welcome back to another weekly price action journal. So again, it comes to that point of the weekend, probably slightly late with this one, but hopefully it's not too late in terms of when people receive this. Market hasn't started yet, I don't believe. So let's get into this. Hopefully we're not here too long, but I always want to preface the point and really hit home the point, the importance of journaling. It is the single action process, however you want to phrase it, where you will yield the most return in terms of personal development in trading. It just is what it is, daily and weekly. And like I said, the weekly gives you the opportunity to step back from the market, reanalyze everything that happened, things that you should have seen but didn't see, things that you did see, want validation on. It gives you the opportunity to identify improvements, to mitigate any elements of your trading model that probably don't yield the performance that you initially thought. A whole host of different things journaling provides. And so it's imperative and important to ensure you take the time to go through with an approach in mind. So my approach and what I advise everyone to do is not just journal price action and what it says and what it's showing. You've got to be intentional about your journaling. Therefore, you have to focus on your models, your trading plan. That has to be the focal point of your journaling. Implementing your trading plan, yes, using self-talk and various other mechanisms to really hit home the points, reinforce them, but fundamentally it has to have some form of intentionality around it, and it should be tailored to your trading plan. And as your trading plan evolves, so too does your journaling, where you're either going to add stuff or take stuff out, but it needs to be intentional. So with that being said, again, if you are getting value from these weekly price action journals, please give the video a like, and if you don't mind, why not subscribe to the channel? Really appreciate it. So let's get into this. So I'm going to start off on the daily. I don't really see the point starting off with the weekly, so we're going to start off on the daily. And hopefully we're not going to be here too long. We're going to just get straight into it and get to the key points. But we're still going to take the top-down approach and go through all the necessary elements. So heading into this week, I was anticipating higher prices, right? And this was because all members had purged this previous week's high. Now on Monday is where we actually get that purge. So we ultimately on Monday displaced through this key price level, and because we displaced and closed through it, that supported the idea that institutional order flow is bullish. Now further clues, depending on how you trade, to support that, we had a bullish order block in here. I wouldn't necessarily classify this as a high probability order block, but nonetheless we did. But it was the order block used to drive price through this high. You see price trades down into it, finds support. So if you use order blocks as a mechanism to determine institutional order flow, then that may be of importance to you. It's not necessarily for me. I like the fact that on Monday we displaced through, closed above. That gave me the indication that yes, bullish order flow still to the upside, supporting higher prices. Furthermore, with price trading at all-time highs, I don't want to call the tops. There's no point trying to call the tops, because you could end up doing that, and as people typically say, it's like trying to catch a falling knife. Very, very difficult. So I want to remain bullish until the premise changes, until I note some form of clear high time frame cracking correlation to support a reversal. Until then, I want to remain bullish. So, as we can see, the market displaces through this old high during Monday's price action. Now, this did it at the time where we could say it supported a potential high time frame cracking correlation with NQ. If we looked at NQ, well, let's get NQ. Let's get NQ. Let's do a new pane. Okay. That's fine. Okay. So we're looking at Monday, which is here. It's Monday. Bear with me, screens are going to turn off. Okay. So if we're looking at Monday, which is here, and you take that high, so that aligned high here. In fact, let's just draw a line here. So if we take that, just draw a line there, we can see Monday here. So ES has traded above that high, and further still, sorry, no, if we don't even take Monday, let's just go back to Friday. We can see how Friday we had a purge of that high and the market on ES traded back below. Yet we can see that NQ is nowhere near that high. So at that point, we do have essentially a high time frame cracking correlation, which could potentially support lower prices if it's confirmed by other confluences. So for me, that wasn't the case. Besides, I don't trade Monday as well. I like to see how Monday plays out. And Monday showcased that there was energy and there was the likelihood of the market wanting to trade higher. So again, even on NQ, the market was indicating bullish price action. So to me, that reinforced the fact that a continuation of higher prices would be more likely. Okay. So the market ultimately continued to reprice higher. We note this clear expansion here on Wednesday. Okay. And that clear expansion formed this displacement. Obviously, we had to wait for Thursday's price action. Thursday retraced, left this imbalance. And then as we can see, the market traded down into the imbalance, down into consequent encroachment of the BISI, and rejected and traded away, took out the high, and then closed back inside of the range. Okay, so let's drop down to the 4 hour and get a little bit more into the detail. Okay, so again we see Monday, so as we detail on the daily time frames commentary, with the high time frame institutional order flow being bullish, again, just re-emphasizing the point, I did not want to get involved in trying to call the tops of the market without seeing some form of clear signature to support a reversal. So you remain with the premise of seeking higher prices, but maybe just taper your expectations or manage your trades a little bit more aggressively, or better still, not necessarily managing them more aggressively, but just reducing your profit target expectations is an option, and something that I certainly noted this week. So following Monday's price action, so here I noted the true week open key price level, where the market ultimately had displaced through. Yes, the market had displaced through, supporting the idea of higher prices. Okay, then we also had obviously this BISI, which was created, or imbalance, bullish imbalance, which was created here as the market was displacing through this old high weekly here. So then we come into Tuesday and we see how, so we've set the Monday high, the market retraces down into the BISI, where I note this high time frame cracking correlation with YM. So that's supporting a potential model and the idea of higher prices, which ultimately delivered. The market then continued to reprice higher, as we see, purging the liquidity above both the previous day's high for Q1 and for Q2. And, you know, as we head into Wednesday, we can see that the market is just expanding higher. Get a displacement here, price trades down into here, reprices and rebalances this imbalance and continues higher, displacing higher. I think it's also important to note how with this imbalance we obviously get this rejection from here, trades down, rejects, bodies of the candles not closing inside, so that is very bullish, and ultimately, as I said, trades higher, forms the high of the day. Then we see this consolidation headed into Thursday. So we head into Thursday, we have this consolidation. We have this consolidation here. Market ultimately reprices higher, likely at some news, I guess, but we'll have a look on the hourly time frame. Market trades higher, purges the previous day's high Q3, where again we form SMT with YM. So we got the SMT with YM. Market aggressively reprices lower. We obviously take out this this BISI here, a H4 inflection point. It's important. H4 inflection point, and ultimately at the close of Thursday, we validate or form the BISI daily. Okay, so before, just bear with me. Okay. So before we see this sort of deeper run into the BISI, certainly to CE, the market trades low, it forms this old low, H4, and then we see this consolidation before the market drops deeper. Now we're into Friday. Drops deeper into the BISI, overlapping with the H4, where we see this high time frame SMT within the same quarter. So to me, as part of my models, that's high probability. That's a high probability confluence, potentially, if confirmed, to see higher prices. So we see it trade into CE, where then we get this rejection. This is the formation of a high time frame model as well. So seeing this high time frame cracking correlation, this SMT, form inside of the overlapping BISI daily in H4 supports the idea, again, seeing the rejection supports the idea that institutional order flow at this point is bullish. There's a resumption of bullish order flow here, seeking high prices. And obviously this is the CPI candle, seeking the high prices, but still would have presented an opportunity. And then we get this huge displacement higher, as I mentioned, forms a model in here, which we'll see on the hourly chart most likely, or we'll certainly mark it up if it's not there. But the actual opportunity for the trade was on NQ for this day. But again, you could use all of the analysis and framework and everything on ES and then engage the market on NQ. And then obviously we see this slight, after the purge of the previous day's high, we see this slight retracement back into Friday's range. Kind of EQ of Friday's range, to be fair, to close out the week. So there we have essentially the weekly price action from a perspective of the 4 hour, from a high time frame perspective, which clearly indicates where potential high probability trades would have occurred. So I'm going to drop down to the hourly. I do want to take a copy of the hourly time frame. Let's go like this. Oh, it's too big. I think that would do. Yeah, I think that's fine. Let's take a copy of that for the journal. Okay, and then we can begin. So now we want to focus on the individual days and just some very brief commentary. It doesn't have to be too expansive. I mean, by all means, you can put as much detail as you want. For me, I like to just concentrate on the highlights, you know, a couple of lines, a couple of sentences, just to narrate exactly what happened during the day. It doesn't need to be, for me anyway, I don't feel it needs to be too detailed, but everybody's different, so it's whatever is going to elicit the level of progression that you're after. So Monday, the market opened, initially traded down, set here what would have been the London low, but ultimately was the low of the week, before essentially consolidating at the true day open. Okay, then we see the market displace higher, fair value gap in here, and ultimately it trades higher to purge this level here, as we can just see the dotted line, which is the previous day's high of the previous Friday, and continues higher ultimately. So yes, we price higher, we get a slight retracement here, then we continue higher, bit of a consolidation, again a little retracement, but ultimately we set the high of the day during this New York PM session to close out the day. So then the market just goes into a range now. We just consolidate all the way through to the New York PM session. But if we go on to Tuesday, again we see how the market opened and is in a consolidation. Now I haven't marked up here because we've got the previous day's high in close proximity up here, so I haven't marked in the Asian range high or the London high, because the reality is I'm looking at it and thinking these are all in close proximity with each other. So if the market's going to trade up there, it's likely going to purge all of them and the previous day's high, so it wasn't necessary for me to mark that up. So ultimately the market consolidated from the Asia range into London, consolidation all the way into New York, and it was essentially consolidating at the true day open, right? So heading into the New York AM session, we see how, going to the AM session, the market reprices lower. Yes, it sets the New York AM session high, but the market ultimately reprices lower, purges all this liquidity, all of this hourly liquidity below here, in some cases 4 hourly, this SLH1, which is key for any one of my high time frame models, and trades down into this BISI H4. So then the market now forms high time frame SMT with YM at these lows before repricing higher, and as we can see, it starts repricing higher. Now this is really choppy, and although there are elements of this which presented a model, it wasn't it was very low probability as far as I'm concerned. So it wasn't something that I would have taken anyway. But ultimately, the market reprices higher, and you can see how this is sort of high resistance liquidity. Reprices higher, purges the BSL New York AM session high, and then ultimately continues higher to purge the Q1 high and set the high of the day. Okay, so we head into Wednesday, where the market opens again, trades down, confirms the SSL London, before we then see this displacement higher. See the displacement higher because we leave a fair value gap, so that's indicating displacement. So we have obviously this BCH1, market reprices higher. We get to the news, I think it was 8:15, where we get this expansion, then this retracement. Then at the news here, the market retraces lower aggressively into the BISI. And this is where I know this PDA SMT with NQ at the aligned fair value gap, forming a low time frame model and seeking higher prices. So the market then from here reprices higher. Now we do get a retracement here, and this could have taken people out of their trades, this retracement, especially if you've trailed your stop losses up. Most likely it would have done that, but hopefully you would have got to TP prior to that. But as I said, the market reprices higher, as we see through most of the news. So going to 1, reprices higher, we see this drop back, and then this displacement higher here, where we set the high of the day, and then the market goes into this consolidation. It trades back into the range, but ultimately into a consolidation at the Asia range. Okay, so far pretty self-evident to an extent in terms of what price is doing, just repricing gradually higher. So we head into Thursday. The market opens, and then we're into this tight consolidation. Sets the London low and the London high within this tight consolidation before the market ultimately reprices higher. Just literally probably a little tickle outside of the London high. Before essentially the market ultimately just stayed in this consolidation to the news. I mean, we've got little tickles outside of the lines, outside of the high and the low, but the market's ultimately in this tight range. Then we see this reprice higher, purges the previous day's high, sets the New York AM session high before the market then retraces down to purge the liquidity below that tight range. So already now we're seeing seek and destroy conditions here. That's essentially what we're seeing. Seek and destroy conditions. Market trades down, sets the New York PM AM session low. Apologies. Sets the AM session low before we then see the market reprice higher, purge the hourly liquidity pool in the form of the BSL New York AM session, and set the high of the day, where we see this high time frame SMT with a YM form. This sets the stage for a model. The market then reprices lower aggressively, confirms this hourly order block here. However, unfortunately, did not trade back into it. Now, I can't remember off the top of my head whether it formed an opportunity on NQ. I think it may have done. So that would have been an opportunity for a trade there. But ultimately, reprices lower to close the day, seeking the liquidity below the marketplace. So then we enter Friday. Again, The market's in a consolidation here, just trading at the high of the BISI daily. The market opens and consolidates again around the true day open. We do set the London high here. By all means, we can mark that up. I just chose not to, but by all means, there's the London high. Before ultimately repricing back into the BISI daily, we set this SSL H1. The market has a slight move higher before ultimately trading down, purging this liquidity pool, purging the liquidity pool of the old low H4, whilst also trading into this BISI H4 inside of the BISI daily. So there's a lot of overlapping confluences there. This sets up a trading model here as we have the high impact news, and the market ultimately displaces higher, confirming the bullish order block. Now again, the actual trade opportunity, so would have carried out all of the analysis and so on ES, and would have noted the fact that NQ actually traded into the bullish order block, which set the stage for higher prices and a potential trade idea there. The market then continues to reprice higher, purges the previous day's high, and then we see the market trade back into Friday's range before consolidating before the to close the week. So that's my narration of what happened during the week, where high time frame ideas and low time frame ideas occurred. So really interesting week. So again, the final step is just to document any findings, any key observations, things that you're going to take on into the weeks ahead, areas of your trading plans that you think actually it's, I've seen enough data now from these weekly price action reviews that this element's probably not necessary, but in fact you're going to add other elements to your trading plan just to either solidify it, sharpen it, improve efficiencies, etc., whatever the true point is in terms of why the changes are required. So you want to detail those. It can be as comprehensive as you want, it can be as short as you want, but the key thing is you want to have something to take away that you can digest and evaluate to see whether it holds true or not. So that is that in terms of weekly price action journal. Heading into next week, we've got an interesting calendar ahead with news focused around Wednesday and Thursday, so that's going to be quite interesting, especially in determining the high and low of the week. We're probably likely to see some form of sorry, did I say CPI on here? I mean NFP. NFP was here, not CPI. We've got CPI next week. We've got CPI next week. So we'll have to see what next week holds. But again, take your time, go through the necessary steps of your trading plan or your playbooks, which have you. Ensure that you've implemented them into your weekly price action journal. You'll see the efficacy of what formulated against your model to see potential opportunities missed and so on and so forth. And more importantly, you'll be able to really give yourself some insight into the areas that you need to improve and focus upon to improve your trading rewards. So on that note, I'm going to leave this one here. Hopefully you guys have taken something away, sort of cut straight to the point and so on. May do the long form next week. We'll see how time presents itself. But as I said, and just to sort of labor and press home the point, this time of doing your weekly price action journal is super, super important. I would even argue if you're a profitable trader making, thousands of pounds, it's still important to do. Some people will argue with that. I'm an advocate that it is important, but, each to their own. But more importantly, take the time, really put in the work to ensure that this is a detailed piece of work and it allows you to elicit the relevant points that are needed to help you in your journey to become a successful, consistent, and profitable trader. Hopefully you enjoy this one. I'm going to leave this one here. Enjoy the rest of your weekend, and I'll catch you guys in the next one.